Hello everyone, welcome to my channel. Today I'm going to talk about IRS shifts to paperless refund, what this might mean for you. In a move set to redefine the refund process, the Internal Revenue Services (IRS), in collaboration with the US Department of Treasury, has announced the gradual phasing out of paper tax refund checks starting September 30th, 2025, as mandated by Executive Order 14247. This transition to electronic refunds marks a significant shift aimed at modernizing the system to enhance efficiency and security. However, it brings with it a complex set of challenges, especially for individuals who are unbanked or underbanked. I'm going to dive into what this means for taxpayers and explore the options available for those without access to traditional banking services. The impetus behind the transition. The transition to electronic refunds is based on several compelling advantages. Compared to paper checks, electronic payments are over 16 times less likely to be lost, stolen, or delayed, offering a more secure method for taxpayers to receive their refunds. Faster IRS processing times also means that electronic refunds can be issued in less than 21 days if the refunds are filed electronically and there are no issues, as opposed to the several weeks it can take for non-electronic payments. Additionally, the cost benefits are significant. Electronic payments reduce the costs associated with printing and mailing checks, thus allowing the Treasury to allocate resources more efficiently. During the 2025 tax season, a substantial 93% of federal tax refunds were already processed through direct deposit, indicating broad acceptance and feasibility of going paperless for the majority. This was accomplished because these taxpayers included their banking information on the tax return they filed. Challenges facing unbanked taxpayers. Despite these benefits, the transition presents distinct challenges for the approximately 7% of recipients who still depend on paper checks. For many, especially those without current banking services, this shift necessitates urgent attention to viable alternatives such as prepaid debit cards and digital wallets. The American Bar Association has voiced concern regarding the rapid timeline of this transition, cautioning that an underbanked individual may face unforeseen difficulties. The ABA has recommended that steps be taken to expand access to basic banking services and to educate the public on the potential risks associated with prepaid cards, which can sometimes incur higher fees and offer less consumer protection. Moreover, the Tax Law Center has highlighted that prepaid cards, while a solution, might not be the most efficient option due to the nature of annual tax refunds in contrast to monthly benefits, traditionally paid via prepaid methods. They stress the need for careful implementation to avoid costs potentially outweighing the benefits. Proposed solutions and alternatives. To address these challenges, several recommendations and initiatives can help bridge the gap for those without a banking presence. 1. Prepaid debit cards. These cards offer an immediate solution that does not require a traditional banking account. However, taxpayers should be aware of any associated fees and the process for reissuing cards for annual tax refunds. Digital wallets. Services such as PayPal and mobile banking apps are viable options for receiving the electronic payments. These platforms can be accessed with minimum initial setup, offering an alternative to bank accounts. Bank on Initiative. This program aims to provide low or no-cost banking services to underserved communities. Taxpayers are encouraged to explore accounts certified by the Bank on Initiative, which feature low fees and no minimum balance requirements. FDI Get Banked Resources. Taxpayers can visit the FDI Get Banked website for guidance on opening a simple bank account. Many institutions offer accounts with nominal fees and requirements, which can be an excellent start for those new to banking. International considerations. For taxpayers abroad, the current policy restricts direct deposit into foreign bank accounts, while advocates continue for changes to allow international ACH transfers. Relying on existing accounts within the US remains a suggested pathway. The IRS move to paperless refunds is both a forward-looking initiative and a logical challenge, particularly for unbanked populations. The transition's success hinges on making sure all taxpayers are adequately informed and have access to alternative financial services. By exploring and promoting viable solutions, taxpayers can mitigate potential disruptions in their refund process and embrace the efficiency of electronic payments. This change will not affect taxpayers already receiving paperless refunds. Thanks for watching this video and do not forget to subscribe to my channel.